Afternoon and welcome to the Blue Line Metals Edge here for Monday, May 23rd. I'm Phil Streible, Chief Market Strategist at Blue Line Futures. Just kind of give you guys a couple rundown here on some things that I'm watching in the metals markets. We saw some real constructive moves here. Basically across the board, U.S. equities were positive, metals were positive, grains were positive. All your foreign currencies against the dollar were positive. This was early on in the session. A lot of people were calling, asking, what had changed or what moved it. So just kind of want to get right into it. We saw, this was last night. It was like 1:30 in the morning Central Time. We saw ECB. We had Christine Lagarde. She came out and they said that the European Central Bank is likely to lift its deposit rates out of negative territory by the end of September, and that could raise it further if it sees inflation stabilizing at 2%. So with that being said, if you go to the chart pattern, and this is the daily euro currency chart, we can see that we broke out to the upside here. If you switch that to, say like a 10 or 15 minute chart, you kind of see this is when that occurred. So it was right in the middle of the night here. This is when she starts talking. So a lot of volatility in the action. She comes out, she seems pretty hawkish. So market goes up with that. You get that carryover effect on a lot of different currencies. You got that carryover effect too on gold. Gold had popped up pretty good on it. This is about that same time frame. Shot up here 1864. Since then we've been backing off just a touch. Dollar index is gaining back some of the losses today. And then you saw silver kind of flurry activity around it. So with silver, I really still believe that it's kind of traveling with copper, which has been a little bit more supportive. You go to a daily copper chart, you're going to see here, this is when things were getting real ugly. China lockdown, no end in sight. They come out and they start saying, hey, maybe the 20th or the 25th or the 1st, we're going to come out of lockdown. We got a little bit of buying going on here. Then we get this second wave down, and really it was a stimulus hope. So if you go to, I use Reuters a lot for some of the news. I just like the way they write it. It's pretty easy to find things. So you go to the news there, and you look, and there was a story they put out. It's right here. The story is China stimulus, supply worries fire up iron ore. So that could have helped the copper market as well. But China lowered its 5-year loan prime rate 15 basis points to 4.45 in the monthly fixing. So biggest reduction in a rate mechanism was revamped in 2019. So we saw that come out, and this was on May 20th. You go back to the chart here, and you could see that it was basically right here because it's in the middle of the night. So May 19th for us, May 20th for them, and that's when we took off. So we're building a little bit of steam on here. I don't think copper's out of the woods yet. I think you got to get, in order to start breaking and switching the the trend out of bearish into neutral, you're gonna have to see a close up over here, and then you're gonna need to see some follow through 450, and that'll probably change that trend and reverse it back to the upside. You go to silver, it's gonna be something similar. Really, you want to see this 2250 on up to 2330. I think that flips it to neutral. You get a punch through on this upside 2350. You'll get all the people chasing again. They'll start buying the top on here, and then they'll try and run it up a couple dollars here. I know a lot of you, we were scaling in on this big sell-off here a little bit early. Jumped in some right around this area. This is kind of when we were in this trading range, added some positions on the way down. And then, this range down here didn't really add too much at all because of that. Had some bottom pickers come in. Really, people were waiting below $20 on silver. They thought it was going to happen because of the volatility in U.S. equities. You can see that, the S&P 500, it's just been getting killed here. And it's really, this stems back a lot farther. This stems back from, first of the year, third of the year is when we opened. That was the top on equities, top on growth, bottom on yields, things like that. So as we get this tightening cycle, you're going to continue to see equities face some challenges. One thing I am watching, and I know people don't want to hear about it, but it's COVID again. And it's actually a couple of the neighbors in here have COVID where I live at in townhouses. And then we had one of the guys at work, he had COVID too. And I talked to a couple other people, they got COVID as well. So It looks like it's making a bit of an upswing. I know you don't want to hear about it, but I'm just, you got to face the facts. So you might see some restrictions come back into place, but I'm not sure. They'll have to figure out what variant it is, things like that. But just kind of keeping an eye on that. And then I wrote an article on Kitco on gold and silver. It was kind of a gloom and doom piece. It was a lot about, the economy, the global economy. Consumer confidence in the UK fell to a 5-decade low. I did see this article. It's right here. It was on the Wall Street Journal, and it was talking about, it was called More Subprime Borrowers Are Missing Loan Payments. And it was consumers with low credit scores, I believe below like 620. Those are your subprime people. They're really falling behind. So, and they talk about how you look at the amount of discretionary income that people have, discretionary spending, it's super low right now. So it's starting to get tight here. I live in a tourist area in Florida, and you could see that not as many tourists this time around. There was a lot more last year, and I really do think it had to reflect the reflation trade. I mean, you could have thrown a dart at any short interest, high beta stock. You could have bought junk, and it was going through the roof. And now seems like there's kind of no place to hide in asset classes. So a lot of stocks selling off, things like that. Unless you're in energy, unless you're long some of the metals, some of the utilities, those are kind of the places to be. Ag, bit tactical, you got to be in. One thing on the ags, I did see wheat pop pretty good, and the story is that, and we believe this, was that UN was trying to broker a deal with Russia, Ukraine, kind of fell apart there. We didn't see it happening at all. So you got wheat snapping back, had about a 3-day sell-off, came back up. It's up 20 cents right now. So see if we could build on that. You get any dryness, hot, dry weather up in the Northwest, you might see that pop up. Chart that I want to highlight here, this is one on gold and silver, and it's against the, it's gold versus silver. It's the ratio. So we were kind of trapped in this range. This one with gold and silver were trading like safe haven assets. This was all the Ukraine, the conflict, kind of the peak of the conflict. And then since then, this is when it started following copper more. And this was when China was breaking down. We saw silver taking more of a beating than the gold market. And this was kind of when those stimulus, the bottom came in, then you get the stimulus coming out of China. So we'll see if this is going to trade back down, but not a formal recommendation at all, adding a silver or gold at these levels. I wouldn't do it. I'd just be patient with what you have. It's more of a trading affair, I think, than anything. June, you got expiration coming up on gold. That's in 2 days from now. We had some short 1800 puts. We bought some of those back. There was another chart in here that was really good too. It was, and I keep looking at these. This was a gold versus NASDAQ chart. You got the NASDAQ. This outperformed gold. This is all basically last year. I think this chart goes back. It doesn't go back all the way. So this is going to be your 2022. This is the move. And then this before this in 2021. The COVID bottom is going to be a little bit off the charts, but you can see we went through a 2-year reflation. Fed was cutting rates, providing accommodation, monetary, fiscal stimulus, things like that. You could have bought anything and it would have went up. But since then, this is when growth had peaked. That was in November. And then you got that second peak. So it's where you get like the NASDAQ and the Russell, cryptocurrencies, they all peaked in like November. You get like the Dow and the S&P, they peaked in January. And since then, that's when Fed tightening comes into play. You start to lift some of the lockdowns. People stop spending on certain things. They're actually canceling, Netflix and all these additional subscriptions and things they have. So you're really seeing a tightening of the belt. So no telling how low this can go here. I'm going to have to look and do some historical, analysis on the chart. But it's one thing I'd look at definitely is NASDAQ versus gold, because I really think it's a reflection of easing monetary policy or tightening monetary policy against weakening or strengthening growth environments. So I think it's a good resource to have. Throw that on your charts. Keep that up. If you need help on building a ratio like that, just let us know. Give us a call if you need anything. We're 312-858-7303. And then remember, futures and option trading does involve risk of loss. May not be suitable to all investors. Good luck. Good trading.